Alright, what's up? This is GMAC. Going to be a quick video going over why time then price is the way to go. The macros are going to be 10 minutes before the hour, 10 minutes after. So, example, 8:50 a.m. to 9:10 a.m., 9:50 a.m. to 10:10 a.m., and vice versa all the way through. I usually give like 5 minutes before and 5 minutes after. But basically, price is going to be doing one or two things. It's going to be running to an inefficiency or taking liquidity. So as you can see right here, we've got 850. Um, the first fair value gap is here at the top of the range. You wouldn't want. I mean, you're in a premium here, so you would want to be looking for a premium array. And right here, we've got a fair value gap, 903. We're inside the time window. Risking about 8 points to get, just say 1 to 3 is 20, 24. You want to get to the 220s. We ran a lot farther than that. Okay, the next one on here is going to be 950 to 1010 and 947, 48, 49. Right here, right at 950, we open up and we're in a fair value gap. We're in pretty deep in that fair value gap, but as you can see, we've been respecting bullish order flow going up. We have it all the way back here. So again, does it offer you a good enough risk to reward to take that trade? It's in an efficiency, taking liquidity. Okay, it just it's going to repeat itself. 1050 right here, 1057 in a fair value gap, bouncing off of VWAP after we've took out these equal lows, or after we've made equal lows. So that'd be a good target. And it just kept running. So as you can see, um, all these times that we are creating fair value gaps during those times. So that's why I like to align. One of the reasons I like to align time with price, to enter on a macro time, because that gives you a window of time saying, okay, during this window we should be in a fair value gap, targeting a swing high or swing low, or we should be taking liquidity, making a swing point, basically. Another thing on time and price, I'll go to a higher time frame, but just using like previous weekly highs, previous weekly lows, previous daily highs, daily lows, session highs and session lows, and even sometimes hourly, highs and lows when you trade Asia. A lot of times you'll get a, sweep, a manipulation of a low in a fair value gap, to go one way or the other. So time-based levels are important because the algorithm refers back to those points. That's why people say, I wait for a sweep of the Asia low or the London low, or the morning low if they're trading the evening session, or whatever. It gives you reference points to look at to say, okay, after we took out previous daily low, how did we react? Did we displace through it, or did we manipulate it? And that's going to go back to manipulation versus displacement. Why that's so important, because if you're manipulating session lows and then reversing, you're likely to go to the other side of the range. But if you displace through it, say at Asia low, maybe you're going to go to the next low. It could be the London low, or it could be previous daily low. So you always want to align yourself with time, then price, because time is the only constant that we have while we're trading. Price can do its thing all the time, but at certain times, that's when you really want to get that in your head, is either trade during a macro or trade after a time-based level has been created. And I believe that will, if you stick to some of those guidelines while you're fine-tuning your trading, that you will see that will help you quite a bit. So it's real quick, short, and to the point on this one. Just have a time-based requirement, whether it be a macro, whether it be session liquidity, a previous daily high, daily low session, whatever. Just have something like that in your approach, especially when you're starting, and you'll reap the benefits of that. I believe because that's what really helped me. So I appreciate you. Short and sweet. God bless you and good luck trading.